All right, ladies and gentlemen, I hope you had a wonderful day. It's the first day back from the holiday, and now we have to talk about selling the news. The first day back, it was all good news over the weekend. The market gapped up, but quickly things started to come down. We did get some data throughout the day, but now the next thing everybody's talking about is what is next. They're pretty much saying all of the debt ceiling was priced in, even though we still have a vote remaining. We're going to talk about that a little bit. Most people are thinking this is a done deal. They are looking ahead, and now the market is getting caught up a little bit in terms of the next step. So we're going to go over all that. We're going to talk about what else happened today. You had runners in AI. You had the small cap ones. If you didn't see NVIDIA, the first $1 trillion chip maker, I think the ninth company in history to hit $1 trillion. Absolutely amazing. But overall, it was all about the debt ceiling. You had a lot of activity in the safe havens, bonds, gold, all of that stuff. But overall, we're looking ahead for the next steps. We got a little bit of overhang from the debt ceiling, and then now you are 2 weeks ahead of Powell, and the market is pricing in another rate hike. So you tell me how you feel. But Chad, it's game time. We got to get into it. I hope you liked the video. I don't know. What do you think about this too? I'm going to give you like a picture-in-picture. So hopefully you like the video though. And again, we're live, youtube.com/the stock market. But let's start with the keys. What you had today, I'm starting with AI, man. Don't get mad at me, but AI is firmly in control. You had another 5% gap up or whatever on NVIDIA. Some of the chip makers came down like Marvel, and that was interesting. But like I'm saying here, the market is already over the debt ceiling and is looking ahead. So the big thing people were talking about today, it's looking to be the jobs report. I believe it's expected to come in at 190,000 on Friday, but this will probably be the big mover, and it's going to confirm probably whether or not the market reacts to this hawkish repricing. Essentially, the market really hasn't responded. Fed futures are pricing in another rate hike. If the jobs report could confirm that, maybe that's when we get our reaction or we see what happens here. But now, let's jump back a little bit to this sell the news, because like I'm telling you, this was a weird reaction today because instantly we were up. It was a very modest gain, but then we quickly sold off, but the sell-off wasn't too big. So if you remember me talking about it, I've been saying I expected a short-term positive reaction off the debt ceiling, and then the market would sell off and then start dealing with all these other things we have left, right? So kind of looks like we have that today, but the NASDAQ was still up. SPY closed right at break even. I mean, it puts you in a very interesting spot. There's the chart so you can see it, but I was expecting a little bit more of an upside reaction, so that's where I think it's going to get interesting moving forward. But now, here's the interesting thing about the market. There is still some debt ceiling overhang, like I was saying, and what I mean by that is that the market is like many steps ahead because everyone's thinking it's over now, and I agree with that. I do think at this point they got the hard part, the agreement out of the way. That's really what we were looking for, but technically speaking, it still needs to pass through Congress. Now, I think they only need like 5 Republicans to say yes, and then it's a done deal, but the overall idea here is even today, we don't really even have a deal. So people are already reacting and looking ahead to the next event and talking about this being priced in or not. And technically, the thing that would make us default, I mean, it looks like it's been resolved, but technically speaking, it's not resolved till these votes go through. So that will be something to watch over the next couple of days. But that kind of sums up today. Positive reaction, sell off a little bit, not too much. Everybody's kind of assuming it's over, and now we're looking at the main thing, and then everything, the safe havens, bonds, they're kind of unwinding or now rewinding up and kind of doing their own thing as we get around this risk event, it looks like. So that's the main point. The next thing now moving forward, coming into tomorrow, there is going to be job openings, and it's going to be alongside of the Dallas Fed, Chicago PMIs, Dallas Fed Services. I think today we had manufacturing, and then also the Fed Beige Book. The data today had pretty interesting reactions. I mean, you pretty much had real estate prices in the morning. That ended up being good. Consumer confidence was actually positive, and then I think Dallas Fed manufacturing was absolutely abysmal and hit a low, but kind of saw data reactions, but overall the market borderline stayed pinned. So tomorrow's data will be interesting, but like I told you, a lot of people will be focusing on Friday and what is going to be happening with the non-farms. Here's one thing though that I'll show you. This is like early tinfoil, so if you got it, but job openings are expected to come in at like 9.9 million, right? But this is the job opening charts. Like the peak, I believe that one was like around December 2022. That was at like 12 million job openings, and it's already dropped to 9 million. So like every single drop in jobs opening, even like the 2008 recession, we've already dropped that amount. So we'll talk about this later, but that data comes out tomorrow. We'll see how that plays out. Oh, here's the chart. I forgot to show you that. Again, I'm going to see how I have to work this in with the video. It's gonna be an interesting one, but watch out for the data tomorrow. That's gonna be one to keep your eyes out for. And then finally now, this is the final thing, and I know there's a lot of this. What's the next step? We're waiting on jobs report. There's a lot of other intermediary data. Where do we go from here? Does the market catch up with bonds? What do we do after the earnings, the AI bubble, all of that? Watch the bond volatility. That's all I'm telling you. The story essentially right now is what happens post debt ceiling, and that story gets reflected with bonds. And we brought this up today. We brought it up in the past. The MOVE index has really been like the real volatility index that has actually shown us a lot of moves. So if you remember this, we have a video on the channel. We've talked about the MOVE index, but take a look. Over the last couple days, it's been rising. It's kind of leveling out. This is a borderline higher point. This is where after it broke down, we rallied in April when bond volatility ramped up. That was SVB, but it's pretty much elevated. It even brings you back to like end of the year levels. Now with all this data moving forward, I think this might be our real driver, and this is something to keep your eyes out for, because like I'm saying, you kind of got this sell the news event, and now bonds, gold, a couple of things are doing their own thing, especially the bonds. So if that volatility picks up, I really do believe that will be our driver, or it could at least give us an idea as like a compass in terms of where things are moving going forward from here. So we'll see what happens. We'll wait for our updates. Other than that, though, we got a lot of data. Thankfully, it's already the middle of the week. So let us get into the plays. So right off the bat, I got 3 plays. I made all of these plays today. We're going to start with the first one, Boeing. I did a options play. I think I grabbed the weekly 217 calls. I grabbed 3 of them at about 20 cents a pop, so $60 total. They had news in the morning that they had orders for jets from like a Saudi airline, like Riyadh Airlines or something. That was in the morning, and I think it's a rumor, not confirmed. And then I played it when they came out with an update on increasing their monthly jet production numbers, a little pop and sell-off, but pretty much I think this play, you either get lucky or it's a bust. $60 on it. If any of these orders get confirmed, people get hyped up on that this week, it goes. If not, it'll probably just stay at this range as it has been. So that's play number 1. I really like that play. Then play number 2, I'm just getting in on the craziness, and what I'm talking about is AI, and I've been saying it. If you want to get in on the trades, $50 in a day. I mean, Broadcom, this thing has moved $100 in a day today. It hit 900, came back down to 800. I mean, Nvidia, 219, 218, back down to, or 418. Why do I keep saying 2? 418 to 400. These are moving a lot of dollars, so they're good to trade. I talked about that a little bit on Broadcom. They have earnings on June 1st. Thought I'd go in on a play. I did a weekly and then a next week debit spread to the upside. I grabbed the 1100 calls for next week, and then I shorted the 1140 net debit of like 75 cents a contract, got 10 of them, so $700, and then I did $200 on the weekly. I'm gonna try to flip that weekly there. I grabbed like the super, it was like a 1080 call for like $100 or $200, so we're gonna see how that one plays out. That one's definite gamble there, but it's just getting in on all these giant swings up or down and just playing the mania and hype dollar for dollar. So the reason why I did options too is because shares you'd have to pay dollar for dollar, where this one could kind of set a defined lotto ticket and then see what happens. So that's play number 2. And then finally, number 3, baby, Bill. If you don't know, this is our cash yield friend. We love Bill. But guess what? The debt limit. We've talked about selling this or not if you've been following with the conversation, but it's simple. If that debt limit gets a positive vote today, everything looks good, still no signs of the rug pull, then that's it. This is going to be the green light for Bill. If there was a problem tomorrow, I would be cautious of Bill, but again, it's looking like things are good for now, but that's it. If we guarantee the Treasury, Bill's yields are, again, the 2-year, 5-year, 1 month, 3. Every yield is way, way higher than even March, the highest that Bill went. So pretty much, if there's no debt ceiling issue, the Treasury gets their money. Bill is about to even start hitting higher levels, and it's game on to sit, wait, and get a lot of yield. So watch out for that one. But that's pretty much everything as far as any other plays. I don't think I made any other plays. I think all I did was the Broadcom today. Our Tesla went up, and then so did the MPW with some flip shares. A couple of earnings tomorrow, and then that's pretty much it. and getting ready. And I think Powell is probably going to be the big data set. Even that NQ2, I'm still holding that. I'm getting absolutely crushed on it. I have decided I want to hold till the end of the year, but depending on what we get with Powell, I think by June, middle of the year, either walk home with the tail between the legs or really decide if we're going to fight. So thankfully, we got a little bit more moves ahead of us and a little bit of data. Then we see where we go from there. And that's pretty much it, Chad. But that is your watch list, ladies and gentlemen. Make sure Hydra Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. Oh, yeah, you like how I'm doing that? I need you to remember, baby, disappointment. Secret ingredient to grow things or kill things. It's up to you. Do not be a prisoner to the expectations, man. That's it. Free yourself. You could be disappointed even if things go good if you got too big of expectations. I hope they feel me, baby. Let's go. I got the He Is Championship time. Just Jimmy Butler, baby. What you know about me? See, I get awkward when it's the camera. Okay, I love you, Horn.